Hey guys, it's the holiday season. The best time of the year. Would you like some presents?
Good morning, good afternoon, or good evening. I'm very good with forecasting the markets, but can't forecast what time you're watching the video. So here is our weekend update forecast as we have finished the first week of December and we are heading into FOMC, which is going to be taking place here on Wednesday. Now, there's the perfect deadlift, and there's the perfect bounce. And that's exactly what we got here, was the perfect of all perfect bounces. After having bottomed there the day after, or OPEX week, right on OPEX Friday, after the big major sell-off, which I provided the warning for you of how we went plus 1% on the day, but wound up going down greater than minus 1% on the day of the prior occurrence of that and what took place immediately after. That was back in April. That was not expected to occur to get a plus 10% day the very next trading session, that being the day after Thanksgiving, which is only a half day. I apologize. That being OPEX Friday as we went into Thanksgiving. But we were definitely looking for our upside. And where was our upside? 69.05, possibly, obviously looking at that 68.90 for the complete gap fill. And that's exactly what you got there on Friday. 68.95.78. Closing there at 68.70.40, just so they adjusted after the market closed because we were down below 68.70. They did it just to make me look like a piece of shit, like I don't know what I'm doing. In any case, before I leave this screen here, we had a minus 5.76% dip. Well needed, well needed. And we've now had a 5.73% bounce off of that. But yeah, coming over to you here to talk about what I'm mentioning here, the 68.75, 68.70s, which were your safer risk being full credit all week long, they decided to adjust the close afterwards at 68.70.40, so you had to give back a portion of that $3 or better credit that you took. So you didn't get $3 credit. You didn't get 150% on the trade. You had to give some of it back, so you got a little bit better than 100%. But as you can see there, coming off of that bounce off of Thanksgiving, it's been a pretty damn good little fucking start to the month. And coming off of a great November, again, we're running on all cylinders here as we go into the 11th trading session on Monday, the 11th, since we have had a minus 1% day. So bear that in mind. FOMC days, just to give you an update because it's been quite a while. Our last FOMC day, which was an expected quarter point drop, it's exactly what we got. The last two FOMC days have they've closed red. Range, not terrible, but it is what it is. The Jackson Hole big explosion was kind of where all the bullshit started back in August. But if you can recall, 1 year ago, that FOMC meeting that we had December 18th, when we were heading into that tailwind of volatility that was just coming into, that major resistance zone that we were hitting, ba-boom. One day, 202.88 range, closed down minus 175 points on the day. The close from the previous day, 178.45, and the results because as FOMC days come and as you will be notified, you do nothing. You do absolutely nothing until you get through lunch. And as we get into 1 o'clock, an hour before the FOMC meeting itself, we start looking at possible trades that we can be looking at. Earlier that day, back December 18th, 2024, we had already traded the 60.35 puts early in the morning. They doubled up. Now they were back at $4.30 again, with the 6,000 puts being down there at 75 cents, thus $75 per contract. 3 hours later, they were $12,490 off of that 75. So $12,415 profit per contract in 3 hours. You can open up an OnlyFans site and you're never going to make that kind of money that quick. I don't care what you look like. So, but yeah, where we're at, again, coming back onto the spreads, everything is copacetic, cruising into what we were looking for, which was resistance to the upside. Nothing bearish whatsoever as we go into this, other than a little bit underneath the pillowcase, which you're going to have to go and search like the tooth fairy, because there are some signs that, hey guys, you're going to get a dip. As long as it's just a dip, you got nothing to worry about until the new year. So since you really got 2 weeks left, you got this week coming up here, which is FOMC week. You got the next week, which is obviously OPEX, and I can't click on the calendar on that screen. The subsequent week is going to be Christmas. So you're going to be broken up in the middle of the week. The following week is going to be New Year's. And again, you're going to be broken up in the middle of the week because you've got that day off, the market close day. So the activity really is going to be here over the course of these next 2 weeks, 10 trading sessions. However, Monday, Tuesday, and the early portion of Wednesday of this week should not be too significant, simply because heading into FOMC meetings, things tend to stall out. So what we're going to look to do here is give you a broad view of everything happening here. And again, I've gone over here and cleaned this up to make sure that we're all looking at the same thing. On the month, I don't know if that's right. Let me make sure that's right. It is right. Okay. So here we go for the year 2025. 48 weeks are complete. We've had 31 green weeks, 17 red weeks. At 2 green weeks in a row. Boom, boom. You know, again, as you can see here, 2 green weeks in a row. This is where we went chaotic back here in August with 7 green weeks in a row. And then they threw out a minus 10-point week. And then you had your, call it, 9th green week in a row before we started selling off there in October. Again, you start seeing that 2 green weeks in a row thing, and even though you can't see it here during 2025, we had 5 over here in January. You got into your volatility, then here you go with your 1, 2, 3, 4 before your little dip there in May. But back in the day, for us older guys who've been around, when you start seeing 2 green weeks in a row, you automatically, the radar turns on. Hey, it's time to be a little bit cautious because, yeah, you get 3. Once in a while you get 4, but you got to start being cautious because, again, you're coming off of this sell down, and now you're coming into this bounce, which, as I've shared, is pretty much just negated itself completely because we've gone right back to where we started from. So a look over on the QQQ, but before we go and do that, your full moon took place there on Friday, and you need to be conscious about that. Going back onto that full moon subject, coming back over here, I'm personally beginning to lose the amount of confidence I had heading into December with this Fibonacci time spiral as we progress forward. Although everything fits to a replication, like I shared for you with your December bull warning. Everything fits, but I'm losing a little bit of faith of the December 2 3-point slippage right there into the full moon being the high top. Not a problem with that whatsoever. December 23 projected to be where the next low pivot comes. I don't have a problem with that. However, I've not been sharing anything exorbitantly bearish other than what you've already seen there. December 10th FOMC SPX spreads prep. Everybody's got it. And your December bulls warning, which unfortunately, because it's on the screen, we have no choice but to share it. The SPX fake print, which took place a little bit more than a week ago, down there at 673.72, which coincidentally goes over there and fills the SPX Wednesday gap back on a week and a half ago at 67.65.88, which is the only gap right now which is anything to discuss. Over on the QQQ, again, 2 green weeks in a row after that massive bounce going into the end of the month over there on November, which did closed red on the month of November like was needing to be. But here we go. We got 2 green weeks in a row. We're up here at 628.92. We've had an 8.3% bounce thus far. Count-wise, I did not put that in correctly, so let me change that while we are here. A 48-point bounce. No plus 1%, no minus 1% days over the last 3 days as we've just been churning in the 625 region. Up 21.62% year to date. Don't forget that. But that's what we've got. So IWM, the interesting monster that actually opened high, low, close over there on Friday in the 250s. First time. Having come off of a 7th green month in a row, which, once again, if you don't know how to spell blow off, it's got 3 letters, and it's IWM. 10.38% bounce off of that decline, which I did not calculate. I maybe did calculate. Yes, I did. Minus 9.44% decline over there in October. 10.38% bounce thus far. So enough with this. I think we're ready to go into the FOMC because, once again, we want to see this happen again. But we're being cautious about that happening again. So in any case, let's go on to the charts. SPX over on the week to date. Well, the week that ended to date, the last 5 days, first 5 days of December. As we got that, okay, here we go. Look at this. Watch what they're going to do. They're going to drop this down right here, and this is going to be the low right here as we just came down to break 6,800 just to get some sweeps out, and we're going to head up. It's exactly what I was sharing there on Monday, and what you had for your low of the week was right there Monday morning, 67.99.94 to be 6 cents below 6,800, and the chop began, and the chop continued, and the support became higher and higher until we had that big fucking over there on Thursday into the close, coming off of that 68.40, and we wound up filling both gaps, the gap to the upside, and we filled the gap to the downside during the course of the day there on Friday. Thus, 68.90.59, as we were looking for, completely filled, done, finished with, nothing more to worry about, nothing more to discuss. 5-day moving average continues to be your number one sign of support. Number one sign of support, your 5-day moving average, as that will continue to move to the upside. As we projected on the decline there down into the October lows, October, November, whatever fucking month it was, the bounce which has taken place since there. So that's November the 21st. And as you can see here, your all-time highs were right back up into the near 6900s. So look at this from a little bit better of a view. Boom, boom, AB. AB 1-2. Call it what you want because it's not yet proven until you get your dip. I'm looking at it like I've shared for you because of the history that I've had with December of this being an AB. AB with the C wave being 1, 2, 3, 4, 5. We got 1, 2, 3, 4, 5, and they were pretty much picture perfect pivot hits. Your 5 coming up here to 68.9750, 2 points away. The possibility of going up to 69.06 remains a possibility. However, I would curb your enthusiasm in encouraging you to be expecting to see 69.0585. Nice thing to plan for, but I'd not be hoping for it. So we've got 2 gaps to the downside, which are the only gaps that are in your view as of now, the only gaps that should be in your view, and more specifically, the only gap that should be in anybody's view. Not that, we don't want that, we want we'll go with here, 5-day, is this gap down here. That's it. 68.84, 67.65. That's the only gap that should be on anybody's radar for the moment. 20-day moving average will be moving up towards that gap. 10-day moving average will be moving up above 6,800, above last week's lows. And the 5-day moving average, obviously, moving upward, will be moving up closer to that 68.52. 50-day moving average, don't even worry about it. It's simply on screen because we had it there from a couple of weeks ago and we broke down below it. That's it. But your full moon now, had a chance to have a first-time one-on-one call with Kareem over the weekend, and I mentioned it to him when we were discussing it, and he's like, how does that work? I go, man, if you really want to warp your brain and realize that this is nothing but a big, huge video game, go onto your chart and go draw a circle on every one of your full moons. Go back as far as you want. As far as you want to go. Go draw a circle on your full moons, and it will blow your mind. Absolutely blow your mind. So anyway, here we are looking at this from a, let's call it a zoomed in point of view. 5.75% drop, 5.7 whatever bounce, up 68.95. Full moon taking place right there on Friday, and we're heading into the FOMC meeting. I mean, you couldn't smell brownies cooking in the oven any better than what we've got going on now. Take a look over at the futures. As I had shared for you, that resistance decline line that was dropping down, coming off of the 2 highs from back there. October all-time high, then the high bounce over there in November. Perfect drop down to the 1.236 extension. And here we are churning above that 68.1225, churning, and just slowly trending to the upside in a bull trap for those of you who play chart patterns. Coming over to the QQQ, and still not completely filled that gap. Not completely filled that gap up there to 632. Not completely. But we did make it over here to the more significant pivot, which needed to be seen. That's 625.37. Had our little pierce above there early in the morning there on Friday, and then just went and churned on it all day long to close just a couple of pennies above it, which, couple of pennies. I mean, there's nothing that you can dissect and say that because it closed above 625.37, does that mean that we're going to... No, it means that the FOMC meeting is coming on Wednesday, and come Wednesday you're going to have all the answers that you want, because it doesn't really matter anyway, because everybody's overbought, which I'll share for you in a couple of minutes here. The VIX gap is filled. This is the gap from back on September 28th. So as we're going to need to zoom out pretty significantly to go and get that gap where it started from back here in September, this gap has been completely filled. And as you see, as you are starting to head down into the 15s, you're already in the mid 15s, the lower mid 15s, you can hope, you can hope, you can pray, you can do any kind of voodoo witchcraft that you want to think that you're going to get a little bit lower on the VIX so that you can get a cheaper position to go out and buy March, June, July, December 2026 puts on whatever you want to buy them on, I hope it works for you. Just like if you were standing in a prison shower waiting for someone to drop the soap just so that you can get that perfect entry. So, as we move off the VIX and we move off that subject, here we are on the Dow Jones on DIA, the ETF. And once again, gap. Nothing significant whatsoever to talk about from a bullish perspective other than your already bearish warnings of having come up to your big, wide view cycles tops. That being that 470.49 as tried warning as many times as possible. IWM, the big drop down there below 230. 9.44% drop, a 10.38% rally, which came off 2 days. 2 days. Right over there coming into the very ending on Friday, where it bottomed here on November 20th. Then we've got November 21 being the Friday, and then what was this? This was Monday, the 20, or Tuesday the 25th, whatever the fucking dates are. I don't fucking know. Anyway, the shit fucking happened. Right back up there to 248.36. Nice little decline. And then suddenly, over the course of Thursday and Friday, we decided, you know what? We're going for it. And right back up to the all-time highs up here at 252.66. I don't know if clean will work. I don't know which chart will work, but there again, I don't need to put it on screen here because I already have it ready on a different screen, which we'll go look at now. So coming on to that, here we go. I will start you off with the Russell because we were just talking about the IWM. And here is your Russell 2000 4-hour. And as anybody with a blind eye can see, you've got a negative sell divergence on your 4-hour at the moment. Widen this out a little bit, move to a daily, and you can see an absolutely enormous, ridiculous sell divergence on your daily. Enormous sell divergence on the daily. And all you got there was because everybody was oversold, we were going to get a bounce. This bounced a little bit too much. Here you are, right up above that 2482.40, your 161.8 extension coming off of your 2009 lows, and we're actually going to go look at a bigger, broader, wider view of the weekly, where the weekly, as you can see, you've got a nice 2 weeks green weekly candles moving your RSI to the upside. But as you can see on your decline, you as well were starting to get your negative divergence building in so that you could push down. When you get your weekly oversold, that's when you're properly oversold. So we weren't oversold as we went into that move coming onto the bottom there at 229 over on the IWM. And again, looking at it from a big, broad, wide view perspective of things, you come here off of your, let's put the 1.382 on there. You come here off of your major lows over there in October of 2023. The big lows, after having come down to the lows multiple times during the course of 2022. You went over here, you placed your big low over there when Israel invaded Gaza. You've got your AB, which is not an AB. It's actually, well, you could actually call that an AB because you got your major decline to break down over the course of April, which is not a bearish, or I'm sorry, is not a bullish move in any way, shape, or form. So we come down and we bring ourselves to here. And lo and behold, what do you see? What do you see other than 1633.67 for your starting point, your top being here 2466.49, And your April bottom being 1732.99. 1732.99. Make sure the numbers are precise to the penny if you are anal in any way, shape, or form. And what do you have there other than a big, humongous, not that, we want this. Hang on one second because this is going to be fun. C. And let's make this 100 just so there's no way that you can miss it. There's your C. Here is your B. No. Had the wrong font. And here is your A. There is your A, there is your B, there is your C. And even though you are up at the all-time highs, having been new all-time highs, having taken out your highs from back here in 2021, this is a bearish move to the upside. And I apologize if that doesn't thrill you, because heading back down into that 1700, 2000 range, 1975, 1965 being your primary target, that's where you're going to wind up going to over the course of next year. So I hope you enjoy your move on IWM down below 200. Over here on the SPX, looking at the 4-hour chart, once again, as we had embarked on entering into overbought, we failed as we went in there over on November 26th. Here we are, slowly declining with a fractional move to the upside, fractional move to the downside, all of which can be negated when the FOMC meeting takes place. But that's what we're looking at here, is a setup for a sell divergence. Come over onto our daily short term, and you can see that we've had this running sell divergence taking place since way back in September. Got overbought way over here in July, never ever had any kind of dip until that recent dip, which just took place that you all witnessed. And what happened? You got oversold. You got oversold on your daily, and you got oversold on your daily rather quickly because you had already been declining on your RSI because we weren't going anywhere. So as price slowly moved to the upside, your relative strength index slowly moved to the downside, which made it that much easier to get you oversold. That's the way the video game works. Come over onto your NDX, and your NDX on the 4-hour is already not only into overbought, tagging overbought, but slowly resisting overbought, as you were extremely overbought when we went in here to the highs. And you can see what takes place shortly after getting overbought on your 4-hour. Again, when you are looking at this from a trading point of view. Come over onto your daily, bigger, broader, wider view. And again, having gotten oversold on the daily, when we had that little dip, here we are heading back up to the upside. Nothing whatsoever bearish on the NDX, nothing whatsoever. And once again, you got to bring into context, coming back over onto screen, you don't have tariffs coming, you have tax. So why would you sell something now and pay tax for it in 2026 when you can sell it in January and not pay tax until 2027? So once again, very much like last year, that's exactly what we've got heading for us as we go into the end of the year. Over here on the Dow Jones, again, same thing. Looking at your 4-hour, very nonchalant, little bit of a sell divergence building up over there. And as you come onto your daily, you can see here, having gotten overbought on the daily, back in July, we've just had this long running sell divergence on the daily, but you got your bounce because you got oversold. So I think the next one I've got for you here is the warnings. The warnings. The 10-year is back to 40. 4.14. That's not bearish. I apologize. That's not bullish. Getting the 10-year back up here to 4.14 is the first sign you need to be very careful about being bullish on the market, because as you can see here with your 4.14, yes, these had been turning points, but let's take a zoom out and see what 4.14 is. Right there. This is your major change right here. Come out and zoom out a little bit more on this so you can see the bigger, broader, wider view of it. We don't want to see open interests. Hide open interests. This is your big changing moment here, this 4.14. As you see here, as we went into December of last year, moving into that 4.14 and then spiking to the upside as we went into January, as you had your decline on the SPX in January after that FOMC meeting. This is your first warning sign right here. The 10-year 4.14. Over here on Bitcoin, warning sign 90,000. Major warning sign 90,000. Not only being minus 20% from the all-time high, but also being your 400-day moving average. Strong, strong, strong possibility for margin calls like you saw. Over here on the dollar Japanese yen, again, same thing. Tagging perfectly 157.70. When did it happen? November 20th. When did we have the major sell-off? November 20th. The yen carry forward trade is wide and alive. And I caution you, be careful about being bullish with the FOMC meeting. And your final warning being here on SPY. Yes, we have undoubtedly floated to the upside all week long, as we expected to do. But you've got this fake print that took place back there on November 28th. Fake print being there's a price that has been printed which did not take place during market trading hours or prior to market trading hours or post-market trading hours. There is no reason whatsoever there should be a print 673.72, and you have one. And 98% of the time, that will tell you where you're headed to. So if you're going to be heading here to 673.72, you're going to be heading to your SPX 67.75, 67.65, which is all that we're looking for on this move. I'll bring you back over onto the SPX itself. Where are we? Over here. Come back over onto this chart and zoom ourselves on out to the 15-day so we can see. So again, on this move that we have had 65.21.92 up to 68.95, our first move to the downside, which we should be looking at, I will put this in yellow to make it easier to see for you, would be 65.21.92, 68.95, 75, 78. Our first move down should be that 68.07, which we already know because you can barely get past 68.25, and you've only once been below 6,800 since back here on November 26th. Your next pivot for your retracement fills the gap completely, right over there to 67.52.97. Now, for a bullish point of view, what a bull would want is to see a dip as quickly as possible down to around that 67.52. That's what a bull would want. And that's what I've shared with you as well. And that's exactly what we're hoping that the bulls wind up getting because, again, it's FOMC day. And FOMC days, like we shared there, aren't necessarily spectacular this year. They're a little bit boring to be, accurate. But we're also going into quad OPEX. Quad OPEX not only being quad OPEX, but also being the end of trading for 2025 as you go into that period there where Christmas week, it's broken up, New Year's Eve week, broken up. So the final trading week will be next week. Not this week, next week. This week, it's all about the FOMC meeting, and this week, it's all about whether or not that December 2, with 3 days slippage on the Fibonacci spiral, continues to give a little bit of confidence that, yep, it's all good. And we're looking for a retracement somewhere down into that lower 6,800 area to fill that gap at 67, 65, 88. And because we have had 1, 2, 3, 4, 5, 6, 7, 8, 9 out of the last 10 trading sessions after that major minus 1% day having been plus 1% day during the course of the day, one red close, which once again brings you back to your spreads. 11 trading sessions since we've had a minus 1% day. And what happens after we have a minus 1% day? That's right. It's not a squat if the bar's not bending. And when that bar starts bending, you push that motherfucker back up and you rack it. And that's what your plus 1% day is going to get you. So I hope you enjoy your Sunday. I hope you enjoy your afternoon, your evening, your morning, whatever it is time that you're watching it. And I will see you guys in the chat room tomorrow morning. I'll have an email out for you with some detail as we get closer to the opening bell.